Nvidia, AMD, Broadcom, Meta slide as bond yields surge. Why tech stocks kept the tone centered on energy and healthcare. Welcome to your daily market briefing for 2026-08-18. We will walk through leadership, macro context, and what matters next for the next session. Here's the broad market snapshot. S&P 500 was down 0.69% and closed at $7,691.76. Nasdaq 100 was down 1.68% and closed at $29,490.96. Dow Jones was down 0.22% and closed at $53,343.40. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were energy plus 1.73%, healthcare plus 1.59%. Laggards were technology minus 2.46%, gold minus 1.72%. Across global markets, the session leaned risk-off globally, with broad market retreat across regions. Asia was under the most pressure, with Japan and Shanghai leading the retreat, while Australia and Oceania held up better than the rest. Stepping back, broad risk tone was soft, with SPX at negative 0.69% and NDX at negative 1.68%. Relative strength stayed with XLE, XLV, while XLK, GLD lagged the board. The stock market fear and greed index is 54, which sits in neutral. That is down 6 points from the prior reading. That suggests positioning is more balanced, and the next macro catalyst may decide direction. Daily market history shows 4 of 4 core ETFs above their 200-day averages. S&P 500 ETF has the strongest 20-day trend at plus 2.55%. 0 core ETFs are within 1% of a 52-week high. This is useful because a close near highs means something different when the same symbols are also holding above longer-term moving averages. Volume data shows 1 tracked symbols trading at least 20% above their 20-day average, while 5 were at least 20% below normal. The strongest participation signal came from Nasdaq 100 ETF at 1.20 times normal volume. I treat this as a confirmation layer, not a standalone signal, because price can move on thin activity, but follow-through usually needs participation. Among mega-cap leaders, Microsoft had the strongest 20-day trend at plus 21.09%, while Apple was the weakest at negative 5.40%. That helps separate index-level strength from the actual mega-cap stocks that often decide whether the move has durable leadership. On the S&P 500 heat map, leaders were energy plus 1.73%, healthcare plus 1.59%. Laggards were semiconductors minus 4.96%, industrials minus 1.48%. Policy expectations remain a major driver, and upcoming macro releases is one of the next data points traders will use to calibrate the Fed path. If that data surprises hot, long-duration trades could stay under pressure. Commodity action was split. Natural gas led, while gold lagged, so the move looks selective rather than broad-based. The index board leaned lower, with Nasdaq carrying the weakest tone and Nikkei holding up best. Mega-cap curves were mostly negative, which points to a broad tone move more than a single-name story. Forex showed a risk-on currency tone, with the sharpest move in GBP/USD and the best relative strength in USD/JPY. Crypto remained constructive, which helps confirm the broader market risk tone. Bond curves suggest yields were mixed to lower, so rates still mattered for the session. The main focus stayed on leadership, stayed concentrated in energy and healthcare. The pressure point remained semiconductors and industrials. For tomorrow, watch the next macro events, the direction of treasury yields, and whether leadership stays with semiconductors and energy or rotates elsewhere. Also watch follow-through on Nvidia, AMD, Broadcom, Meta slide as bond yields surge. Why tech stocks are getting hit? Because headline risk can quickly reshape sentiment. That is the key takeaway for today's market. Broad risk tone was soft, with SPX at negative 0.69% and NDX at negative 1.68%. Relative strength stayed with XLE, XLV, while XLK, GLD lagged the board. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.